Welcome to the evening recap for Wednesday, March 16th. So we had a very big down day in the market today, of course, with the fear of the Japan radiation spreading as well as unrest in the Middle East. And the Dow closed down 242 points, closing at 11,613, and it was actually down almost 300 points intraday, and the S&P down 25, closing at 1256. And the VIX, the volatility level, definitely spiked up over 20%, up 5 points to around 29. And what we have in front of us is the chart of the S&P 500. You can see that we were talking about this triangle here where it was consolidating, and it hit and broke support here, and it tried to hold it 2 days ago. It even tried to hold it yesterday, and today it just fell through. So anytime you see a pattern where there was a big whipping tail to the bottom side, and then on the following day it doesn't bounce up but actually comes back down and fills that tail and then closes lower, that is definitely a bearish sign. So right now things are definitely looking bearish. If there is any rally, remember, on any pattern, you want to sell when it rallies back up to the downward trend line or if it breaks support. And right now it looks like our next level of support isn't until 1226, which is the prior high back here in November. And you can see from the two highlighted ovals, we actually gave up all of the gains for 2011. So we're pretty much starting right at par. Looking at our volatility VIX chart, look at this big spike here, intraday going actually above 30. And right now with volatility so uncertain, it's very hard to predict where the top is going to go. But if you listen to the old adage that when fear is really high, it's time to buy, this is where it takes the most courage to step in and buy on the market. But if you try to call the tops or the bottoms, that's also when you can get run over by the train. So I would actually wait for the market to settle down before really initiating any big paper positions. Looking at some of the harder hit stocks in the market today, first we have Aapl. Aapl is down about 4.46%, over $15, and this is a stock that typically does not have a big down day like this. And so you can see from this chart, our next level of support here is actually going to be about 326, so we're not too far away from that. So look for Aapl to either bounce off this if the market does rally, or if you have a break below this, this can continue to go down to 300. So Aapl is one to keep an eye on. Next, we have American Express. The financials also took a hit today. This one down almost 3%. It actually kind of broke this neckline at about $43. It triggered our sell today. And so look for American Express to also either bounce here or break through. A lot of the best setups are the ones that give you obvious levels of whether it's going to bounce. And if it doesn't, you can take the opposite direction and go on the bearish side. LDK, which is a solar company, also has somewhat of a nice little setup here where we actually had a pullback and then we had a brief rally, and then today this bearish signal here where we actually engulfed yesterday's body is called a bearish engulfing candle, also hitting the 50-day moving average. So LDK could be a stock that has further room to drop here, and the previous low here is way down here at about 1050, so that's quite a percentage drop if it does continue to fall. Another thing that I wanted to take a look at were actually some stocks that actually performed well today in such a bearish market environment. And so looking at that, we actually had a few that pop up. Number one is SWN, which is Southwestern Energy, and this stock actually was up 3.28% on a very bearish down day. So this is where some of the money was going to for safe haven, and you can see we're hitting resistance. So if you get a breakout above $40 in the next couple of days, or if the market does have a relief rally, this stock will have more of a chance or probability to go up because it's gone up even when the market was very, very bearish. So keep an alert out on that. As well as HK, which is Petrohawk Energy. This stock also pierced through a resistance here, and look for it to close above 22 for a break above. So remember, whenever you go counter trend the market, you really have to be very conservative or aggressive to take these type of positions. Minimize your size and make sure you exit quickly, because when you're going counter trend the overall market, then it's very hard for stocks to go counter trend unless it's super strong. But these are the two that really stood out. And then one other one actually was Whole Foods Market, ticker symbol WFMI. holding up relatively strong and pressing against resistance at 60.50. So a break above that would also deem pretty well for Whole Foods. So the market right now looks bearish. Any type of update would probably be seen as a bear rally. I mean, not bear rally, but a bear pullback before coming back down again. So a lot of anxiety. The market definitely has some bearish tones to it. So let's get ready to change gears, since we've been in a bull market for so long, almost 6-8 months now. There could be a lot of profit taking to be had as well.